morning. One final sip of coffee, huh? All right. Good morning. How are you? Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Sandra says, hey, good morning. Today has been 3 years since you've been hanging with the Wainster. Happy anniversary, Sander. Sorry, I forgot. I didn't get you flowers, but I appreciate you. So anyways, welcome to Forex.Today. Yeah, today look, a couple of markets in Asia are closed. I think Australia's was closed. I think half, if not all of Europe is closed today. So I think what we'll do is we'll do some technical analysis, of course, but I think we'll also spend some time just doing some fundamentals as well. And we'll set up the trading week. So we'll look at the calendar and we'll go through that. There's, for example, Bullard speaking today. That could be a market mover. IMF is starting today. I don't think that'll be a market mover yet, but it's something. And in fact, I believe it's Thursday that there's a big speech where Powell and Lagarde are going to tag team the IMF. Cool. So anyways, we'll do that kind of stuff. And of course, I will answer your questions. So please subscribe, please like, and leave comments. Okay. So again, we will cover technical and fundamental analysis. If you're new to Forex or you'd like to learn my methodologies, even though you're perhaps seasoned, you're like, hey man, I like how the Wayne do. Well then, look, in the description below today's video, there are lots of different links to resources that you might find ideal for you. There's a link to my book. Okay. There's a link to free training courses on YouTube that I've did many, 13 years ago, I would guess. But all those techniques are still valid today. So Hill says, I'm a con artist? Huh. Interesting. Okay. What else? There's a link to paid video training courses, which are $88 a year. So Sohail, be careful. I might get you on the $88. And then what? There's a link to tradersway.com. I believe they are a trustworthy, ethical firm that provides fast execution speed, narrow spreads, huge swaps, world-class customer service. Those are all good things. So tradersway.com, if you are new to Forex, that's what you're looking for. You need a good execution partner for your future successful Forex trading business. If you've been around longer, just look at your swaps and you'll find out that in many cases, if you're not with Traders Way, you're probably leaving swap on the table. Oh, thanks, Sohail. Sohail took it back. Okay, thank you, Sohail. So anyways, yeah, so all those resources are there. This is my way of saying I'm here to help. And remember, I've been doing live streams longer than YouTube has even been around. So there are resources that I've been doing for almost 20 years now. If you need access to help, I'm providing your modality. Let me know how I can help. Okay. But if you're just here because this is fun and interesting, this is part of your morning routine, at least click the thumbs up button. Again, you're not really making me a billionaire by clicking the thumbs up button, but it'd be nice if YouTube promoted this content. And I think that might be part of the algorithm. So let's make the world a better place. All right, let's take a look what's on your mind. Only 28 people have answered the survey. So I'll leave that for now. Please answer the survey. We need at least 30 to make it statistically relevant. Otherwise, the sample size is not large enough. So while you guys go with that, let's go through the calendar. See, today is very quiet. And remember, Friday was really quiet. And that has to do with the Easter holiday. We have Bullard speaking at the Economics Club. No, maybe it'll say. No, it doesn't say. Which club was it? I forget. Anyways, it'd be. I forget what it was. I heard about it earlier today, and I thought to myself, oh yeah, I like that group. And then I can't remember what group that is. But anyways, Bullard's speaking today. Okay, cool. And then tonight we have RBA meeting minutes. So I have it on my agenda to go to the RBA website today. And I might do that this morning, but then I'll have to go later tonight or really tomorrow morning and download that and take a look. But I might... anyways. So that's great. That's good. This gives us an idea if the RBA is changing their outlook. It gives us an idea of what they're discussing. So, 6 months ago, they said there was no chance anytime soon. What they meant by anytime soon is years and years and years for them to raise interest rates. So in the meeting minutes, we might learn are they changing their minds or not? Cool. So that's why you'd look at that. Okay. Import-export data out of China. This is important because your foreign exchange. Excuse me. Hang on. Sorry about that. All right. We're foreign exchange traders and import minus exports. Exports minus imports. Okay, it's part of our GDP calculation, but more importantly, when a country exports, okay, they're importing money. And when they're importing, they're exporting money. So X minus M is for stuff, okay? And we're not really interested in stuff per se, but in reverse, it's, what is it? M, is it still X minus M? I have to think about that. Okay, money. That's what we care. I think that's still a minus, isn't it? Yeah, whatever. So you that's what we're right. That's what we're concerned when you're looking at import and export. That's for stuff like, and services included in the stuff. Okay, but that translates to stuff out, money in, money out, stuff in, and so. Not only does that help you with GDP, but really, think about it. That's money crossing a border, and that's when valuations change. It's probably the most important part. Because when you look at GDP, C plus I plus G plus net exports, okay, this is total growth, which we are interested in because it tells us the health of the economy. Okay, this is domestic, and this is foreigners, okay? Cool, and you put that together, and that's the activity of the country, so that's growth. But as currency traders, we're interested in X minus M even more because not only is it growth, but how much does our domestic economy sell to foreigners and how much does our domestic economy buy from foreigners? And either way, that's money in and money out. And when that happens, money in and money out, that's money crossing a border. We call that the foreign exchange. So this is actually our business. So this is good for fundamental analysis, but this is what actually changes the value of currencies. Foreign exchange, foreign currency exchange. So anyways, that's a big deal. Cool. Now, way out Wednesday, we have Canadian CPI, which is inflation. Cool. Okay, so we'll get a good read on that. The Fed's beige book. Okay. Now, the beige book is based on the Federal Reserve banking system. It's a system. The United States is unique because they have a central bank here, they have a central bank here, they have a central bank here. They have two central banks where there's lots of farmers. They have a central bank here, they have a central bank here. The Board of Governors is here, and they have a central bank here, and I'm missing a couple, but whatever. So they have all these central banks all over the place. Okay? And each one represents a different part of the region. So you look at Cali, and that's going to be quite different than Texas, huh? And Texas might be different from Georgia. But how similar is Georgia to like Chicago? There's another one here. If this, I'll move the Board of Governors here, and then we'll put Philly here, right? New York, right? Missouri. So, anyways, they're all quite different from each other. And what they do is each central bank goes around its region talking to businesses. Because they already have backward data. Backward meaning they've already collected numbers on how companies and businesses and other sources of economic data from their region. They know what inflation is right now. They know what inflation has been. Or they know what housing prices are right now and what housing prices have been. They know what the job situation is like now, and they know what it's like, what jobs have been. But then they call up businesses and they say, well, what do you think about the future? How do you feel about the future? What do you think jobs are going to be like in the future? What do you think wages are going to be like in the future? What do you think about demand in the future? And now that research gets compiled by every central bank, and then they send it to the Board of Governors in New York. Okay, Texas sends theirs, Cali sends theirs, Chicago sends theirs, Philly sends theirs, Missouri sends theirs, Georgia sends theirs, okay? And all these reports get compiled into a book with a beige cover on it. So there's a beige book, and that is released publicly, so you can get this and read it. And this is the basis of discussion at the FOMC meeting. So as presidents of each one of these banks, voting members and not voting members of the FOMC, they all read this, and it gives them an idea how the country's doing, because you might be an expert in California, or let's say the whole West, because California and Washington and Oregon, and I think it goes all the way out to Colorado, right? You might be an expert on the West, but that doesn't make you an expert on Philly. And then how about Detroit, right? So anyways, you gather from your region as a president of one of the central banks in the United States, and then you send that out. Now you can read the whole report, and eventually, this information leads to the vote. It leads to the vote of whether interest rates should go up or down. Now, when you get to the FOMC meeting, there's also a blue book, which we don't get access to, and also a green book, which we don't get access to. Now, one of these, and it doesn't really matter what color it is, but one of these is the staffs, the economists get together, the staff economists at the Board of Governors get together and put out scenarios, an outlook for the future. And they say things like, if you raise 25 basis points, this is what we think will happen. If you raise by 50 basis points, this is what we think will happen. If you don't raise, if you raise one, and all this kind of stuff, and they put these projections together. And that goes, I think that's the green book, and so on and so forth. But nonetheless, you can actually read this. And you'll decide, because here's what I've been saying for years, if California is in a recession, then Detroit will probably be in a depression. They're not the same. And so they may ask for different resources from the Board of Governors and the Federal Open Market Committee. Okay? And they may vote differently, and so on and so forth, right? Okay, cool. Now, I skipped something important here, and I want to go back because we're going to discuss it a little bit today. Oops. Oh, gee whiz, you're kidding me. Kate, that interest rate decision is coming up. Okay. But we already got some insight here. But I'll show you that in a second. CPI out of New Zealand, okay. Right now, it shouldn't be crazy hot. Yes, all prices are up, but remember, with China still locked down, prices are not as high as they could be. So this will be high, but maybe, about that. Probably be about right. Maybe even a little bit lower than that. Thursday's quite quiet. And then Friday, retail sales in the UK, retail sales in Canada. So a nice, good week. Susan says, so trade surplus is good for Forex traders. Well, you opened up a whole can of worms, Susan. Like, what do you mean by good? Right? Like, what do you mean good? Okay, there's no such thing as good. There just is. So let's do that. X minus M. Okay. Susan says, so it's trade surplus. So you're saying if we export more than we import, it's good. Well, what does it actually mean? There's no good, there's no bad. What this means is your currency, let's not do a particular one. Let's just do the dollar, okay? All right, so you're exporting more than you're importing, so the value of your currency goes up. Okay? Now you're saying, so that's good. Well, I don't know. That's deflationary, so maybe right now that's good. Typically that's bad because why are we not importing more? But also, if we did that, is that good for, let's say, the yen? Okay. So that would make the value of the yen go up, which makes Toyotas and Hondas more expensive than Kias, more expensive than BMWs. So that would not be good for Japan. So what then Japan does is the central bank, for example, will do something to then lower it again. So they take all the money that they received because of their exports, and then they send it back and they buy things like bonds. Okay? Because they don't want a strong, right? So my point here is you could argue more exports leaving the United States or at higher prices like we have now and less imports or lower prices relative to our exports, then that's dollar strong, and you say, so that is good. Well, see, there's no good or bad. It all depends, right? It would be bad for Japan, okay? And maybe good for the United States. But of course, then the next thing is, why is this happening? Typically, the United States exports a lot, but they import even more. Okay? Okay? Even more. But if we're not importing, why? Why are we not importing? Well, in this case, we can't get stuff. We might be buying stuff. I bought a lot of stuff in the last 12 months, and I'd say at least half of it never showed up. Okay? So that there could be a problem here. So like, why are imports low? Because the supply chain? Is it because Americans are dead broke? Imagine if Americans had no job. If unemployment was 20% in the United States, imports would be way down. And now farmers still might be able to sell wheat, so we would have a huge surplus. But that would be bad. Farmers are working, but nobody else is working. And that would be bad, but we'd have a surplus, trade surplus. Okay, so that would not be good. Okay, so don't think good and bad. Okay, there is no such thing. You're putting some sort of what do you call it? Not subjective quality to it. You have to think about the business we're in. Japan is in the business of exporting. Okay? Oh, my pleasure. Japan is in the business of exporting cars and machinery. So if their currency is strong, their cars and their machinery, it becomes more expensive to their customers. And that would be bad. So yes, positive terms of trade, right? Or in this case, trade surplus is good, but then they have to counteract and then find a way to weaken their currency. Okay? Because remember, they're competing. They have to compete against China, Korea, right? Germany. Those are big competitors. All right. So that being said, let's take a look at how you guys answered the poll. Are you risk on or risk off today? 50-50. Yeah, that's about right. Slight more risk on, but not statistically irrelevant. So that makes sense. That's what a market is. So we could argue that the market is somewhat neutral today, and so be careful. I've been doing some work. This just happens to be up, so we can go through some of this stuff. This goes back on Thursday, I guess. Late Thursday? I don't know. Yeah, that's late. Yeah, so Friday, China time. They did not cut interest rates. And that's why on the calendar here we had an interest rate decision. I skipped it, and I'm like, I thought we already had that. But anyways, we'll see. There might be another thing. Now, the interesting thing about the People's Bank of China is if you go to their English website, it hasn't been updated in 2 years or 1 year, maybe 1 year. Sean says, hey, have we hit peak inflation? That's an easy question. Analyze commodity cycles and tell me when demand ebbs. When demand ebbs, we will have our peak. So are we getting close? Probably. But I'll let you do your research on commodity cycles like oil, for example. We discussed it in the day trading group last night. I gave a very specific answer, but that's because they've already learned all this stuff in the training courses. So I'll leave that to you. Okay. But are we close? Probably. Okay. So anyways, so if there's another interest rate decision coming up tomorrow or tonight or whatever it is, we'll see. But already the central bank has failed to cut, which is interesting, huh? Okay. Now, this is the People's Bank of China website. Like I said, if you go to the English website, let me just open up this. It hasn't been updated in years. You can tell this by, you can go to like news and look at this. Bank of China Research Institute releases its report on economic and financial outlook for 2021. Here's one from the second quarter of 2020, May. You're like, wait, look, they haven't updated it since December 2020. Come on, Bank of China. Yeah, you'll find it, Sean. Just, the easy one is when does oil peak? Okay. Pretty standard. So anyways, you don't go to that one. You go to the actual website, this one, and then you have Google translate it. And then I pulled up this report you guys might find interesting. Okay. This is from today. See, they actually publish economic outlooks for gold, for foreign currencies, for example, every single day. Okay. So if you want to take a look at some of this stuff, this is what the Wayne do, by the way. You should be reading all this stuff. Cool. Now, you're probably going to go to the Reserve Bank of Australia's website today. Okay, you've probably been to the Bank of Canada. We did this last week. So if you didn't watch the webcast or read the monetary policy statement, you probably should. I'll just post that for you. I have to go over this one. Last week, the Central Bank of Singapore, the Monetary Authority of Singapore, intervened into their market. There's the report of how they did it through their exchange rate mechanisms. So I was reading that over the weekend. Later today, you'll have to go to the Reserve Bank of Australia website. Okay. Excuse me. Look at their inflation. Look at their inflation. Let me compare again. Inflation 5.7 in Canada. Inflation in Australia 3.5. Okay. Okay. So anyways, you'll probably be there to grab this later tomorrow. It's actually tonight because of the time difference. Lots of great things you could be doing. Okay. Very often, if you go to media, you can find these great speeches. That's not the right link. Maybe I like that. Speeches. Okay. Changes to the Reserve Bank's open market operations. I mean, there's some great stuff in here. You could become an expert in Aussie dollar in no time. Cool. All right. So that's it fundamentally. There's lots that can be done right now. I hope you're interested in doing some research and setting up the rest of the month, the rest of the quarter. Let's do some technical analysis of commodities like gold, oil, and Bitcoin. Then we'll look at some dollar pairs. We'll look at some yen pairs, and then we'll call it a day. What do you stink? Smell like a plan? Okay. One thing I'm watching closely right now is Bitcoin. Bitcoin, to me, acts like a good risk-on, risk-off gauge. And so I ask you guys, are you risk-on or risk-off? It was split 50-50. But one way you can make that decision and say, well, currently it's risk-off. Okay? Currently, it's risk off. And if you got something like this, then it'd be much more risk on. Okay? But right now, to make that decision, you could look at this. This is Bitcoin, by the way. I don't know why there's no watermark. And, well, you could argue that this is directional, and it is. Okay, but this part of the move is bearish. So now if it moves up here in the next few days, then that would be more risk on bullish. Okay, but has it happened yet? Not yet, but remember Europe is closed today. So maybe it doesn't happen, but here's what you do. You set this up. Okay, and you're looking for pa-chow, pa-chow, pa-chow. So you set up an inverse head and shoulders. Okay, this support becomes support here after a higher high. Okay, So that's really tomorrow's trade. Cool. You guys like trading the future? That's what you're supposed to be doing, huh? Trading the future. Now, I'm going to ask you, how many people had their interest piqued when I showed you the Reserve Bank of Singapore, or the Monetary Authority of Singapore, adjusted their exchange rate? Wait, what? The Monetary Authority, the money bosses, the people in Singapore that change the value of their currency. Whoa, isn't this what we do? We trade valuation changes? There is a group of people that change the value of the Singapore dollar. They changed the value on Thursday. Is that interesting to you? Are you actually going to read the report? Are you going to do some research? Just like wake up call, just like, hello, just want to make sure people are paying attention. Maybe you could help them out. I don't know. That's your decision. Okay? All right. So let's go to my oh my WTI. Okay, this looks like a potential buying opportunity, kicking it off the hourly 21. Okay. Cool. Now, in the day trading group last night, we actually talked about this one. Okay. And I kind of gave, not specifically, but generally, a 60-day outlook. And more importantly, why I think what I think. Cool. There you go. Bitcoin down, oil up. Okay, that's okay. And now we look at here. Here's our trade plan from last week, if you guys remember this one. Okay. We had to, this went all the way back to like Thursday or even Wednesday. Remember? We had this here. And it was, if it broke, then there's your buy. So that's happened now. Where were you? Okay. In the day trading group last night, we were here, and the idea was we had this pegged out as the short-term target. And so 8 hours later, we've hit our target. Oh, you're welcome. Okay. So now what? I don't know. Okay. Now what? I don't know. And then hesitate in there for a bit. What do you stink? Okay. You can see it. Watch this. You're right. You ready for it? No. That's called price action, baby. Okay. Cool. Got it. Define distributions. I don't understand what you mean by distribution. Even silver is Oscar Mike. Just pachow. Kick from last week. Even silver. Okay, so when you see gold going up, what that's telling you is inflation is higher than growth. But JR, if you mean just simply like, if you mean like gathering central banking reports, where do you go to learn about what they mean? If that's what you mean, fxbootcamp.com. Cost you $88, and probably by the end of the week, you'll be somewhat of an expert in central banking as well as macroeconomics. So you go right to the central bank website. Yeah, that's it. I don't read news. I read economic reports. Okay. By the way, gold just hit our target. Cool. So anyways, there's that. Let's do dollar pairs. Do some yen pairs. Okay. Cool. I'm short USD CAD. The bigger time frame is here. La 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 la. And the swing trade is this. La 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 la. So right now, the plan, even though it's fairly mediocre, okay, is this. JR, again, I don't know what you mean by physical. You mean, do you order them like a book and have them delivered to your house like Amazon? No, they're PDFs usually, or just web pages, HTML or PDFs. Yeah. Okay. Yeah. No, it's super easy, man. Yeah, super easy. All right. So, anyways, yeah, I don't feel good. I don't feel bad about any of the trades yet, but that's what I'm thinking. I know it's a lot to ask for. We got a lot going on here, but I don't know. That's what I'm thinking. So I'd like a stock market rally today. I don't know about you. Yeah, Richard Spencer's like, just pay the $88, right? Yeah. Euro dollar. Okay. Euro dollar holding steady. Okay. On this bottom, I have it marked here. Oops. I have it marked here. And a bear is looking to sell later today. And a bull is probably waiting. Okay, that's a 4H. On a smaller time frame, okay, you might be preparing for this to bottom out and head up. Okay. Right now, the sell zone is in here. And maybe because it's a thin market, there's no Europeans today trading, that maybe it just hasn't happened yet. And maybe within 24 hours, this heads down. That's your thought process. I don't know. I don't know what you think. Okay. But if you are a bear, that's the sell zone. And what you're looking for here is lower low, lower high, lower low, lower high, lower low, lower high, breach. Okay. Cool. Aussie is heading down still. And I'm disappointed on this one. Right? Even on the daily, it's busted through, right? Through some key moving averages and all that kind of stuff. And is heading down. And even though I understand why, I find it disappointing because it's rare. I think I can use that word. It's rare that this happens now. What's more common is sort of like this. That's typically what happens this time of year, what we call seasonality. But yeah, not yet. So this zone here is a zone that if you were a bull, this would be the area in which you'd be interested in buying. And we're now in the middle of that zone. We have breached the 55, or we're on the 55, I should say. And the way to play this, and I'm going to give you a taste of sort of how FX Bootcamp works, right? That technically this is heading down. There's no discussion about that. Okay. But now forward guidance would be, okay, if you were a bull, okay, if you are bullish, AKA you want this to go up, you would want to look at this line and this line and determine that this is the monthly buy zone. Good. Doesn't mean you buy it yet. It's just you have the right price, generally speaking, but you still don't know the time. Remember, the price is on this part of your chart. The time is on this part of your chart. So you right? Oops. So you might have the right price, because you say to yourself, well, somewhere between this price and that price, you're interested. Okay? But you don't know when you want to buy it. So the next part of this is you're looking at the moving average, and you combine this with smaller time frames, and you say, one more drop down. Okay? And then, because of this green zone, that's an exit zone. That's a bearish exit. And this price zone is bullish. Bullish price, bearish exit. So that could lead, not that it will, but it could, if you were a bull. This is a great price. And then you want to combine this with an up, higher high, down, higher low, and then a purchase. And the idea of this purchase is if you're right, and right now technically you're not right, but if you get this right, there's a couple of things going on here. But one of them is if you buy it, okay, again, remember we said this, down, okay, and then something like this. If that's correct, that just because you buy it and just because you get a short-term reversal doesn't mean it's a long-term reversal. But what the pattern suggests is that you could slowly but surely work your way back up to 77. I know that's a lot of ifs, but that's forward guidance. That's you thinking, not today, maybe tomorrow it sets up the bottom, but the day after tomorrow. So maybe you got a Wednesday rally. Okay. Thank you, Richard, but you can call me Wayne. Okay. You're too formal. Sean says, hey, maybe an abnormal year. Well, once again, X minus M. I want you to think about this. And by the way, in your first year of economics at university, let's say you're getting an economics degree in what they call principles of economics. Okay, you do that first, economics, okay? You do that first, then your next class is micro, okay? So that's your first class. Your second class is usually, micro, and your third one is macro, and then you decide what kind of economist you want to be, and then you start on that track. And I'm a macro guy, so I continued my track here. Okay. So anyways, in principles of economics, you say an economy is, okay, nominal GDP is equal to C plus I plus G. Consumer spending, business spending, because remember, businesses don't spend, they invest. Also, consumers spend, but when they buy a house, that's an investment. Okay? So consumption plus investment, I like to dumb it down. Consumer spending, business spending. And then government spending. What happens to the currency if consumption goes up? Nothing. Okay. What happens to the currency if business spending goes up? Nothing. What happens if government spending goes up? What happens to the currency? Nothing. And vice versa. Down, down, down. Nothing, nothing, nothing. Now, this economy could be in a boom cycle. It could be in a bust cycle. But my point is the value of the currency never changes. What if there's more money in the economy? You have inflation. But the value of the currency hasn't changed. In terms of dollars, a dollar is a dollar. Now, your dollar might buy less, but the dollar is still a dollar. So your purchasing power might go up and down, but a dollar is still a dollar in terms of dollars, because this is a closed economy. So you learn about the economy in a closed economy because it's simple. Then you move to an open economy, and an open economy has something unique to it. Exports minus imports. And that's where the currency changes. So Sean says, hey, it might be an abnormal year. Okay? Richard says, hey, supply chain issues. Okay, great. What you're talking about is imports and exports. So in an open economy, right? In an open economy like the U.S., when things are good and Americans are rich, they tend to import more than they export because foreigners tend to make things cheaper because wages tend to be cheaper and other costs and rents tend to be cheaper. So America exports its money and imports products. Great, because, right? Right? Apple doesn't make phones here. They make them in China. So Apple decides to export its money and import the phones. Cool. So that's, in an open economy, that's good. And in a good, healthy, normal economy, exports are big in the United States. The United States is by far one of the largest exporters. But in a normal economy, imports even more. Therefore, there's a trade deficit when things are good and the dollar is weak. Do we have a trade deficit now? No. And we're talking about recession in the next 2 years and stuff like that. So going back to abnormal year, yes, if you're looking at Australia, you could say, yeah, this is an abnormal year. But why? the fact that it's down, there's no value. Everybody knows it's down. Look, it's down. So how do you predict the future? X minus M. You've analyzed Australia and you've analyzed the United States for X minus M. I went over this last week of how I've done it for the United States, but you could do this for Australia. So why did Australia come down? Okay. China lockdowns. You paying attention? Cool. So when is this going to go up? China opening. Yeah, it's abnormal. But you have to predict the future. Okay? So once we started getting lockdowns, we talked about Australian slowdown. And now I know you're an expert. Now I know you're an expert because you could say, oh my God, inflation in Australia is 3.5, but in Canada it's 5.7. Canada's probably going to continue raising interest rates, and Australia isn't even thinking about it yet, but you want to read the meeting minutes tomorrow to see if anything's changed there. That's how you do it, guys. Yeah. Could you click like? Would it be too much to ask? Would you please click the like button if you found that helpful? Cool. Cool. So I need the stock market to go up. I don't know about you. Like that stock market to go up. So this is the S&P 500. And this analysis goes back a couple of days ago, maybe Wednesday. Can't remember. I guess it was the 14th, whatever the 14th was, Thursday maybe. Okay. And what happened that day is I analyzed this, and you can see it says market open. So somewhere around here, or market close, we had this. What I was hoping for, okay, is the old close, the old resistance, and I was hoping for this. Okay, that's what technical analysis shows you. Okay, if you are a bull, now remember the counter of that is this area right here. That's the only line on the sand that would have held that down that day. Okay, so on that day, if you were a bull, you're going to want to look at this and you want to catch a roll reversal. Once again, if you are a bull. So that particular day, I was hoping for this, never got any confirmation. And what happened? Now, oops, let me try to get this. Well, I guess I could actually use the drawing tool. Let me put a horizontal line here. There's this. Oh, that's the actual price. Hang on. And then there's this bottom. So now I'm only interested in those prices. Go into a 15-minute chart. Okay, and that's what I'm looking at. Excuse me. Okay, Bank of America reported today. Okay, loan provisions. Okay, what that means is the bank takes some of its capital, because remember, you have assets, you have liabilities, okay? That's a balance sheet plus bank capital. Okay, so you take some of the bank capital and you put it in reserve. Okay, so you take it out of bank capital and you put it in reserve as an asset. I believe that's how they do it. And you're worried about the future liability. Or maybe they just keep it under bank. I guess it's still bank capital. It's not a... But they put some in reserve in case some of their loans, which is an asset, right? That would be right. If some of these loans fail, the money is going to come out of bank capital. It's not going to come out of bank client accounts. It's going to come out of the bank's account. So, right? So anyways, they're going to have that money left aside, or let's say they put some money, let's say a percentage, it might be one easy way to understand. They could take 10% of their money and keep it aside in case loans fail. And as their economic outlook, okay, as their economic outlook changes, let's say they think the economy is going to get worse. The bank management may decide, it's just a decision, to have 15% set aside in case these loans fail. And if the economy is good, they might change this to 5%. Okay? All right. So loan provisions. Think of it as insurance, but it's just bank capital. Okay? JP Morgan raised. Okay? But Bank of America lowered. Wells Fargo lowered. Now, some of this, I think of domestic concerns. Okay? And I think these guys are not lending Russian companies money. But JP Morgan probably was. So they have more risk to the war than these companies. Okay? It's one way to look at that. Instead, what you hear sometimes is that JP Morgan thinks there's going to be a recession coming up, and that's why they did it. And I think that's way too overly simplified. Well, my version's simplified too, right? I look at this as an issue of Russia. Okay, JP Morgan is much more global than Bank of America and Wells Fargo. But it's interesting to track like what the bankers are thinking. Okay, you might have caught the report from Goldman Sachs. Anybody? You guys catch the report? Let me... By the way, you could do this right now and look at loan provisions. See if you can find it. Okay? Okay? Provision for credit losses Okay. I guess that's more, right? They've increased their provision. So they're going along with JP Morgan, and that, right, increasing their provisions, which tells you they have more exposure to Russia. Makes sense, right? More exposure to Russia than Bank of America. Now, that's not money thrown away. That's just money set aside for a rainy day. And right? And that money can be deployed later down the road. You might want to take a look at, so I would imagine if I read this in detail, you'd find out that investment banking is down, but trading is up. There you go. Fixed income, commodities, and currencies. Okay? Up 154%. Investment banking down 36%. Yeah, so that makes sense, right? Cool. Do you guys like doing this type of research or not? Yeah, Jim says it's still an asset. I think what happens is you get assets, liabilities, bank capital, and I think money gets moved from here to a loan provision. You might move it from here to here. So this is down, but this is up. But I don't think so. But I guess the bank can't spend it. I don't know, because this is like, it's an interesting thing. I'm not an accountant, but like this is already profit made. So putting it back into here, you're kind of mixing it with your business, right? Like this is all from clients. You have client liabilities and client assets. And you're mixing yours with theirs. And somehow it seems like you wouldn't do it that way. You'd keep it separate and just say, all right, of the bank capital, we have different types. Okay, we have cash, which we can spend. We could do distributions. We could do a dividend payment. We could do stock buybacks. We could just buy a helicopter with it. Okay, or we could put some in loan provisions. In case business gets bad, our profits would fall because we're losing money. But remember, right? You bought it with you borrowed it from your client. So like, for example, you lent Russia, okay, you have a deposit here, $1 billion. That's your customer's money. If they ask for it, you have to give it to them. Therefore, it's a liability. So on this side, you have $1 billion in cash. So it's also an asset because you're sitting on it. But you don't make any money on that. So what you do is you convert that not in, deposit, but you loan it to Russia. Okay? And Russia is paying you 3% on it or whatever. And you got it, right? So that's cool. But what happens if Russia defaults? Well, now this loan provision has to come over here, and it's a loss to the bank because the bank did something stupid. They made a bad loan. And the loss goes right. That's a bank liability now. And now you take that loss and you put the $1 billion back so that their money is there. Okay? Okay? Right. Yeah. If this loss diminishes this, yes, because it was the business decision to invest really this liability and try to turn a profit. You made a bad decision, so it's a loss of bank capital. But I think it gets transferred because that was a liability. The investment was you used client money, but it's a liability to the bank, not a liability to the customer. Okay. Oh, thank you, Darko. But Darko, this is just, what I do all the time. Right. In the macroeconomics course, I use a lot of different sources, right? Goldman Sachs, JP Morgan, International Monetary Fund, the Federal Reserve, multiple Federal Reserve banks, the World Bank, the United Nations. And it's important to get all these different sources. Yeah. All right. Well, that's it. I'll let you guys go. Thank you for being part of my team. If you want to join FX Bootcamp, you're welcome to. It's a whopping $88 a year. And if some of this stuff I covered today went over your head, look, it's $88. You'll be an expert. I'm telling you. It will be helpful. I'm not trying to hit you over the head so I can get $88. I think the $88 would make a difference. And I think a lot of people here would agree that it has made a difference. And what I'm trying to do is to have a positive influence on your trading decision. Okay? So I will see you later today in the Asian session if you're in my day trading group. Also, day traders meet for the European session. And where's the link? It's in the description below, or you just type in fxbootcamp.com. Okay? So anyways, thank you to Traders Way for being part of our community. Thank you to you for being part of the community. Hey, YouTube, would you please promote this? It's quality content. We're trying to make the world a better place. Here's an ad to make YouTube money. Cheers.